Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Welcome back. Thanks for tuning in. Great to have you with us. Got the gang here today. Broker Daily Uncut. Eva, Costa.
How are we?
Good morning.
Good morning.
Survived the extreme heat of the weekend.
Yeah, I like the heat.
You don't like 40-degree heat, come on.
On the beach, I like it.
Yeah, there's only so much I can bear. Went for a swim in the morning and I'm like, that's it. It's air conditioning for me.
Yeah, I'm not there at like midday cooking, but
I live out in the bush and 40-degree heat and strong winds, it just signals like fire
yeah,
hazard.
that's true, yeah.
And where I live's there's only 50 houses and it's about a 15-minute drive to anywhere. So you've got all these people who are sort of retired, even older than me, and there's a little WhatsApp group and the immediate focus is fires. There's a fire in Hornsby, you know, it's but you it's a different proposition when you're sort of out there there's one road in, one road out, or you're diving into shark-infested waters.
Sounds great.
So I was going to say, it gives you a lot of options there.
You burn or you're getting
No auction data again for this weekend. I did hear Tom Panos, who is a real estate trainer, talking about the opportunity for agents in January. You know, because there's this kind of mindset of nothing happens in January. But it was quite interesting. He was saying for agents that do get listings up and running in January, because you've actually got buyers that want to buy because there's not very much stock on the market, you have an opportunity to get a good sale price. And whilst that was sort of an interesting angle for me, the last place that I sold in terms of my own principal place of residence, I used an excellent agent called William Chan from Chan Yard. William I've known for about 14 years, since he started in real estate. Anyway, he sold my property in Easter, and it was in a really funny time. There was a weekend that nestled, this was going back 2 years ago, that sat just between the school holidays and the actual Easter weekend. And he said, Alex, we're going to sell it that weekend. He goes, because people aren't going to put properties up for auction and there won't be a lot of activity, but you've still got people buying. And he sold it for quite well above the reserve. And he's a good agent. You know, he'd managed my expectations. But it was a really successful auction. So there was merit in what Tom was saying. And
we do see actually clients, and I like those clients saying, look, it's the beginning of the year. I know it's sort of quiet. Let's get it ready.
Yeah.
And that's good, because the banks aren't too busy. We put it in, it goes smoothly. You don't have like 2 weeks wait time. It's actually a really good time, the first 2 weeks of Jan, to get things into place.
Here's the thing though. Sorry, go on.
Oh, no, I was just going to say, I agree with Eva. Like last week we came back and I find that I'm really busy at the moment. Like so many people, like you said,
Well, yeah,
are going, let's get finance sorted. I want to start, hitting it while we can. And early on in the year, because these things take time, you're not going to find a property straight away. And I find that it's probably been one of the busiest years since I've been in the industry. So no, it's been really good.
Here's the thing about buying, right? You're going to get smart buyers, and smart buyers look for an advantage.
Opportunity, yeah.
So and whether it's really interesting differentiation between buying your own home and buying an investment, because your own home you're going to live in. So you're not going to go, right, I'm going to buy this one here because it's available. But if you do the hard work and you look around, you can only buy what's on the market. So the end of that kind of end of the year stuff, if you've done your homework and you've spotted places that you would like to live in and you've watched the ones that haven't gone through, you can get a chance because vendors start to panic. Yeah. But if you're an investor, there's no better buying time. I bought 2 places in December because guess what? They'd missed their investment properties. There's like not expensive ones, one bedders down in Melbourne. They're out of favour anyway. You got fatigued sellers, but I bought 2 because the vendor they're going, now there's Christmas and then nothing's going to happen in January. So guess what? Yeah. You get a deal done. The same for this first, 3 weeks or so. As a buyer, if you got your finance in order, it's great buying time.
Yeah, it is. And for finance, it gets done quicker.
Yeah. All the lenders up and running. What sort of time after obviously brokers take a break, have to take some time. When is it? What's the earliest stage that you can actually start?
They still have like skeleton stuff going on, so it's still moving during the Christmas break. We still had like settlement on the 31st of December or Boxing Day. They're still happening.
Yeah,
they just have less stuff. But like compared to December, where everything was so busy, there was even some mortgage managers that stopped taking refinance application. Like, we just can't cope with the volume.
Yeah,
it was so busy. Everything took forever. I think I sent an application to NAB, and unfortunately, I couldn't get it done in time. Just like 3 weeks wait time.
So we're a week in proper, but I know that you guys have been sort of keeping an eye on what's going on. So looking back now over the last week,
so the timing is back to normal.
What I was going to ask, Eva, is, and same with you, Costa, before we take the break, is what are you starting to see with just a week? How much are you seeing from repeat customers coming back and asking questions, whether it's actually making a move? How much are you seeing in terms of new inquiry? Give a bit of a snapshot as to what's happening.
Well, for me, my majority of mine are returning clients, where we sort of did something with them the second half of last year, where they're like, you know what, I want to hit the property ladder again. And, when you have these initial chats, you sort of talk to them about what they want and what their long-term plans are. It's not just hey, we'll sell you this loan, off you go do your thing.
Yeah.
So it's sort of more of a broader chat. And because you've had a broader chat, they sort of got in their mind, all right, I'll sit on this property for 6 months, and then in the new year, I'll get back to you. Let's get some pre-approvals in place so then I can go again. So that was sort of my experience. I've had a couple of new clients, but mainly all returning.
Yeah. How about you?
Yeah, similar. And quite a few new one, though, coming from a referral from an existing client. So someone that would say, look, I had a discussion with my son over the Christmas break. They would like to get into their first property.
Yeah.
So it all comes from, I guess, existing clients more than new inquiries.
Yeah.
Or completely brand new inquiries. But in that sense, it's still new lending. And I like that when people are like, oh, I've done well. I've got a few properties. I want my son or daughter or neighbor to get going. I think that's great.
Good. We'll take a break there, guys. Back in a couple of seconds. Welcome back. Broker Daily Uncut with the gang here. Looking at the lending side, let's pick up some of the themes from 2025. Big changes from lenders across. I suppose a response from lenders around the whole trust proposition. There was some loose talk in social media from some of the buyers' agents, some bad guidance around what you should be using, trust-based purchasing. We've seen a response. I think Macquarie was the first one out there at the traps. What's the latest? We go into 2026. What's the landscape looking like? So
ANZ just announced that they're going to make some changes, or they actually right away made some changes with their trust lending. So now it's not as dramatic as Macquarie saying no more.
Yeah.
But they're reducing significantly LVR to 70%.
From
90.
Wow.
They used to do 90.
Yeah.
So I think it's actually, I understand the decision. It's actually protecting themselves and the borrower from, I guess, those tricky situation that people can get into when they over leverage in trust, or they're saying the trust is positively geared and go and borrow again and everything falls apart. So I think it's a good decision in the sense that they're still going to do trust, but they're going to do it very safely.
So I've got a question for you. I'm maybe asking you a question you can't answer, but so that's a policy.
That's a policy.
That's a policy change.
Yep.
Right. What about existing customers?
So they have to be existing customers.
No, but when you change policy, obviously you change your policy moving forward. But then if you've got already stuff on your book where you've got people at 90%, say, because they've changed their policy for a reason, because they feel that that structure is dangerous. And this is, I'm asking you a question you probably can't answer. I would be asking ANZ, but it's a sort of a philosophical question. If you've got that type of borrower already on your book, surely you're looking at that type of borrower and going, we're not comfortable with our existing 90% LVRs.
So you're saying they're going to
I'm not
increase
saying
rates,
anything. I'm asking,
that's your thinking that they will.
I think they just
posing
leave the
question.
client there, like the lending's been done, so they're not going to really do much to it. I would imagine it's just for new clients.
It's yeah.
It is for
I
new
don't
clients.
for a second think ANZ is going to go along to everyone, but it's just a philosophical question. You know, like
Yep,
if you've got
I guess it'd be like a bit like the SMSF
kind of a risk
products that we've seen. So they stopped, like the big banks stopped doing SMSF, and then they didn't really help the client that was still with them. So that's where we saw sometimes people
Try to weed them out.
with rates like 9% plus.
Yeah, so this is it.
Not helping them, and then they get stuck.
And we saw this. I can remember Phil up in arms because of St George because
Yes.
they'd like
They
ramped
wouldn't
up the
help.
rates. So this is it's a serious
It's
question.
a way to push people out, I guess.
to push people out.
Yeah.
Because again, if you change policy around a particular type of borrower, sure, you're not going to go, right, everyone who's on 9% get out, you know, but you can make life uncomfortable for them.
Yeah, totally.
ANZ, if you're listening, let us know.
Yeah, that wouldn't be the first time we see that happening. Yeah. Well,
This-
even Macquarie that doesn't do trust at all anymore. Well,
This important note for, you know, for brokers that have borrowers in that particular category, you know, is,
yeah.
you know, is there going to be pressure?
Yeah,
put
I
on
guess
those customers?
it's in their interest to move while they can.
Yeah.
You never know.
Do you have as much of your book?
Yeah, and that did
Yeah.
trust very well. So
Yeah.
does trust very well. So
We're not being critical of the lender incident.
No,
This
no, no, not at
This
all.
is absolutely it's the shifting
Yeah,
landscape
markets, definitely.
that you get through appetite to lend in certain areas, and there's been a lot of negativity and you know warranted concerns around that type
on
of
the
lending.
trust, yeah. Well, look, it's always been like a specialty product that the Big Four were doing well.
Yeah.
The issue is now we've got so many people that took on that product that probably were not as sophisticated as what it was made for.
Probably shouldn't have taken it on. Yeah.
So it's like, well, let's leave it to the specialist lender, and then it would be great for them. Pepper and First Mac, Resimac,
Yeah, there's
Think Tank,
lenders
they're going to
there that-
pick up so
yeah.
much business, and they're good for that too. So
Yeah.
that's going to be interesting.
Not a question for you guys, but it would be, I suppose, a sort of a rhetorical question. I wonder how many trust-based borrowers there are out there. I don't know if there's any kind of analysis or,
It would be good to find out.
you know, it'd be good. I'll have a chat to
It would be a
people.
minimal, like, you know, obviously for us it's quite big because we are
'Cause we
dealing
do
in
investment.
investment pool.
Yeah, but this is your area, right? You're gonna have,
Yeah.
you're gonna have
If
I
you
think
think
you
of-
said you got about 30%. Did you say you got 30% in?
In trust, yeah, probably. It's huge because a lot of our clients have more than 2-3 properties.
Yeah.
But if you look at the numbers, like the number of investors that have more than 2 properties is like 3% or something
Yeah.
of the population. And of those that actually invest in a trust would be even lower.
Yeah.
So
but
for
it's,
us-
but your area of specialization.
Yeah, so for us, it is a big thing. But I guess in the whole scheme of things, it's not so much of a big deal.
I haven't seen the latest data, but unless things have changed, there's significant investor activity above and beyond
Yeah,
any other
correct.
cohort. What about? I know you're going to do a podcast later this week around on one of the other channels around first-time buyers.
Yeah.
And I know it's not your beat, but I'd be interested to know with the incentives for first home buyers if there is a marked uptick. I'm afraid I can't tell you. I don't have
For
the
the
data.
rates, you mean, on the rates?
Well, you know, with the with the various government schemes that are out there to stimulate the first-time buyers, with the 5% deposit and the no LMI type thing.
Well, the 5%
Yeah.
deposit scheme, which came in late last year, new data's actually come out. Cotality have done it, where where are you? So I'm just looking at my notes here. The prices of the homes eligible for the scheme have increased 3.6%, whereas to the ones that aren't eligible for the scheme only rose 2.4%. Now, people are going to say, but that just may be the market. But every other quarter, they're pretty much on par,
Yeah.
those two segments of the market. So it's clearly taken effect, and more first home buyers are hitting the market now because they do have that greater cap now to purchase, which is the 1.5 mil.
It's obviously the goal of the government to stimulate that area. A byproduct is going to be when you've got demand, guess what happens? Prices go up, And,
But as prices go up, there's going to be less and less houses available for
Yeah.
that price range because they're going to go over the threshold. So, yeah, I don't know what the perfect scheme is. but-
Supply, probably.
yeah,
that's probably
there
it.
isn't a perfect scheme. Is
Yeah.
the bottom line.
Yeah.
You're absolutely right. It's a supply issue across the board.
Yeah.
And I've been here for 25 years, and it's always been the same. There's just always tight supply in the Australian market, and there are some pros and some cons with that. and depending on where you sit,
correct,
if you're trying to get in the market, it's very, very painful. If you have invested in property, then it's one of the reasons why we've never really seen the property market go backward. I look at the prices in. It's a complex situation. But I look at the prices in our capital cities, and they're high. But
they're high. But if you compare with other London or Paris or
London, Paris, but you look at Adelaide is not London or Paris.
Yeah, right. Yeah, but Sydney, you could compare Sydney to a big.
Sydney's different, and Melbourne to a reasonable degree.
Yeah.
Right, we'll take a quick break there. Back in a couple of minutes. Welcome back, Eva, Costa, Alex with you. Broker Daily Uncut. Let's get on to the very fascinating and interesting conversation, the ever-moving feast that is inflation, and of course, how that's going to impact rates. Are we still looking at flat for this year? Is there much talk of increases for this year?
Well, some good news came out this week where inflation has dropped to 3.4, down from 3.8, but the trimmed inflation, which is what the RBA goes off, that's dropped to 3.2 from 3.3. So in February's board meeting, it's most likely where it's just going to stay on hold.
Yeah.
Whereas if you were asked this question a week or two ago, everyone was pretty much saying that they were going to go up.
Yeah.
So there's good news coming for everyone. How long that stays like that is anyone's guess.
It just oscillates, doesn't it? It's like rates stay flat. They might get cut. They're going to go up.
Yeah,
it feels like you're just in a static.
Yeah.
You're in a static area where they're probably going to stay flat. There are some long range forecasts, although I can't tell you what they are, right towards the end of the year. Are we at the end of the cycle? I don't know if we are.
It's hard to say. I feel like there's so many predictions. Yes, of course, one's going to be right.
They change every day, right?
And they change every day.
There's so much data they go off where that data changes every quarter. So you can make a call one day, which sounds like that's the way it's going to go. Then some new information comes out and you're like, oh, cool, this has changed now.
But by the way, this is the way it should be, because we had this ludicrous situation when we were at 10 basis points with the RBA coming out, the previous governor saying rates won't change for X number of years, which was absolute
that's right.
terrible.
Yeah.
You want to be in a situation where it is changing weekly,
adapting,
monthly, based on headline figures. And then the RBA then has the opportunity to manage expectations with rhetoric rather than actually changing rates. Because the market will hang on what the RBA says. We're seriously concerned about inflation. Everyone goes, oh, right, okay, rates may go up, and everyone tightens up. If they talk about kind of an easing of policy, then people start to regain a little bit of confidence. So Alan Greenspan was a master at this, over in the US with the Federal Reserve in what he said shaped the markets rather than actually what he did. So there's an element of that. But it's looks good. Good news that things are looking.
Yeah, I think it's good news. Listen, it's more money in our pockets and all that.
Yeah,
and brings more investors, gives it a bit more confidence going. We can invest with the certainty that rates will probably stay flat for a while. But again, we can get some news next week which changes all that. So
but the forecasts, even with sort of the cards that we've been dealt at the moment in terms of rates, is that people are going to keep buying and the prices are going to keep going up.
Yeah. Well, even when rates were high, people were still buying. Prices were still going up. So is it really going to make much of a difference? I think we spoke about it last week. I don't think it will.
No.
Listen, it may just mean people have to tighten their wallets a little bit more. But if you're an investor, you're going to go hard. If you're looking for a property for you and your family, you're going to go look for it. So it's either now or never, really. So, yeah.
So just in closing, where are you seeing most people borrowing to buy from investors? This tells a tale because you've got, I guess, anyone who's applying for a mortgage, they're looking at a purchase that's 4, 6, 8, 10, 12 weeks down the line. Where are
still a lot in Victoria we've seen last 3 months or so. Yeah. Those are mainly people coming with an buyer's agent alongside them. We've had a few in Darwin.
Yeah.
More of, I guess,
because the
seasoned investor that want to
the data's not good around it, which always signals that there's a buying opportunity. You've got to work out whether
and people have done great in short time there, right? So I guess if you can manage a bit of more risky type of investment, we've seen Darwin. And consistently Queensland.
Yeah, just keeps going.
Yeah, and a lot less in WA. Like that was 2 years ago. That was 80% of what we were doing. Yeah.
Although, but the longer term,
yes,
Catality is still forecasting growth.
Yeah, that's right.
Because there's still a massive shortage of supply over there as well. And again, as we sort of touched on, this is.
And now we see people mentioning Tasmania, so we'll see.
Everywhere, gang.
It's everywhere.
Yeah, it's buy it all.
Buy it all.
Guys, thanks so much. I really appreciate you taking time to catch up.
Thank you.
It is so good for me to have an opportunity to pick your brains, to get analysis of what's going on. There's obviously, a shortage of sort of real information and data from the lenders, but I think as the year picks up, going to have a lot to look at for 2026.
They were going to catch up and send us million of updates in the next few weeks. We're going to have a very long podcast then.
For everyone else tuning in, wonderful having you with us. We love your feedback on the podcast. Please keep it coming. Have a great week, and we'll catch up with you next week.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.